Ladies and gentlemen, welcome to another trading session. And on this chapter, we have identifying market structure. Okay, so we have a bearish market structure and we have bullish market structure. And then under the bearish market structure, what is written there is a bearish market structure is characterized by a series of consecutive lower highs and lower lows. Simply put, when the price is consistently making lower lows and lower highs, it indicates the formation of a bearish market structure. Okay, and for the bullish market structure, we have under it a bullish market structure is characterized by a series of consecutive higher highs and higher lows. Simply put, when the price is consistently making higher lows and higher highs, it indicates the formation of a bullish market structure. Okay, so on our screens, the theme for today, or what we are looking in this chapter, is identifying the market structure. It's important, guys. It's necessary that we notice and we realize all these things that help us to determine where or positions that we are in the market. Okay, so when we see some things, we should know which positions we want to assume, or we should know if we are exiting or we are entering the market. And that is why identifying a market structure is necessary. Okay, so um on our screen we have a simple structure like this. You can see the green here, which signifies the bullish structure. We can see the red here, which signifies the bearish structure. Okay, okay. So we can look again on these screens that we have bullish swing structure, which is a strong highs and weak lows. Okay, and we have a bearish swing structure, which is a strong highs and then still weak lows. So if you look over here, we have the low here, we have high here, we have the break of structure here, and we have the higher lows. So it's in three steps for the bullish structure. Okay, for a bullish market structure, we have from the low to the high, then we have a pullback which forms the higher low, and we have another pull up which forms the higher high. And when you look over here, when this high is created and from this low there's a pull up to break this structure here. Okay, this is a break of structure to break this structure here and form a higher high. You will see that you have a retracement back to form another higher low and pushed to a higher high. Same is true for the bearish, which is a reversal. But okay, looking at the bullish trend right now, you will notice that the higher lows here wasn't lower than this previous low here. And if you look at this new higher low, we can see that it wasn't lower than this one here in that form, which gives us a trend to the upside. And when you look at the upside, you see that the highs keep getting broken and creating higher highs. When you see it creating series of higher highs and new series of higher lows, we have a bullish market. Now, same for the bearish. From the high to the low, a retracement back up to create a lower high. We have our breakup structure here. We have a lower here. Okay, so when you see this way, we have from the high to the low, from the low creates a lower high, breaks this low here and form another lower low, and then retraces back to create another lower high, same manner. And with this we can identify that this high here, okay, the new lower high here created wasn't higher than this one, the new lower high created wasn't higher than the previous one. In that manner, then you determine your bearish market structure. Okay, okay, so same is true for this. But then we look at our bearish market structure here. I want to show you guys this. I want you guys to understand what it means to identify the kind of market you are in. The importance of this is that it helps you to determine your entry positions and your exit positions. So anytime you see this formation of lower lows, series of lower lows, it's a typical bearish market structure. All right. So over here we have another example of a bearish market structure. Okay. Lower lows, lower lows, lower lows, lower high. In this manner, creates that trend. It creates that trend. So if we look at this here, we can see when market begins to form this, there's a change in the market pattern. All right. Let's take our lower lows like we have over here. This is a bearish structure. Okay. So when you want to catch your bullish structure, we first look at it this way. We look at it forming from the bearish to the bullish. All right. So let's say we look at our bearish structure, which is the low here. It creates high here, create a lower low. We pull back and creates a lower high here. All right. So this kind of market, how we trade it is you first wait for it to create that low. It moves to the high here. You wait and let it break this low that has been formed here to create another lower low. Then how we trade is you wait for it to get back to retest that low it has created here to form another lower high. Then from this point here, we take our sell positions to the downside. Okay. So when you look at this structure, you notice that when you see price moves this way, you have to be patient for you have to be patient for the retracement back to where the low was formed. Then you take your sell position in that manner. Same thing goes on identifying when the market is about to change, when there's about to be a structure change from the bullish, no, from the bearish to the bullish. And what we have here is when you see market create that lower lows, but then market moves up to break that lower high it's created. Okay, and then comes back to retest and form and still push to break that new high. That gives you a change in the market structure. Okay, it indicates here, as you can see labeled, that as soon as price creates a new high, all right, be cautious because the trend may be undergoing change. It's true. So like I've taught you guys, the lower highs price break to create a lower low here and then form. All right, when price retraces back and then goes higher than the lower high it created and then retraces back again to create another higher low, and when price forms a new high and price retraces back to break that new high it has formed to form another high, then we know trend. Okay, we know that trend is in a different direction. It is changing from bullish, it is changing from bearish to the bullish side. Okay, so we are looking at couple of examples. So for a practical example, on your chart you'll be seeing something like this. Okay, you'll be seeing diagram like this, and this is how we see it. This is the lower high. Okay, and then price has created that lower high, and this is a lower low here. You see it. When price break this lower low to create another lower low, the price retraces to form another lower high and breaks down again to create another lower low. In this manner, you know you are in a bearish market structure. We are in a bearish market structure as soon as we see this form. Okay, guys. So I want you guys to be looking at this often. All right, to look at this as much as you can and see that price. Okay, I want you to study this. Have this at the back of your mind. There are some PDF notes that I'll create later. I'll be sending and leaving it in the description for you guys to see. You download and then you study these things. When you have these things in your fingertips, you can be able to understand the market in which you are in. All right, so let's go. This is a practical example, another practical example of a change in the market structure. So let's say we see price forming these lower lows here on our chart. We see price doing this here. All right, how we notice that price is about to form, or price is about to change structure from the bearish to the bullish. This is how we know. You see, price will now refuse to form lower lows. So when you see price creating lower lows, a low that is lower than the previous low, like this low is lower than the previous low, this low is lower than the previous low. But when price refuses to make another low lower than this previous low, and it begins to form a new high like this over here, that is how you know price has changed direction. All right, that is how you know market has changed structure. It has changed from the bearish to the bullish side. And how we trade this is you wait for price to make a retracement back to that lower high it created, and then you take your bullish or you take your buy positions and then spread price to go up to the upside. Okay, so like I'm saying, you see, when price creates this new high, how to trade it is you wait for it to come back and create another lower high. All right, when you create another lower high to retest this form here, you take your buy positions for price to move to the upside. Okay, so you can go back this video as many times as you want. You can watch this video, look at the diagrams, learn it, have it in your fingertips, and this will be a guide in your mastery or your forex trading mastery to be able to be a profitable trader. So then I'll say have a nice day and wish you guys happy trading till we meet next time on other sessions. Have fun, happy trading.